Rahul Chadha is with us, founder and chief investment officer at Shikhara Investment. Rahul, good to have you with us here. Good morning. Thanks very much for your time. Uh, so the question is, the market's being a little complacent with tariff policy and what the end state tariffs could be like. Could they be higher, a little sort of steeply higher than what everyone is assuming, that it'll be just 10%? What's your sense, Rahul?
Yeah. So our beliefs mean tariffs are going to settle somewhere between 15 to 20%. There is going to be a lot of rhetoric around it, a lot of noise around it. The idea here is to induce, from a US perspective, other trading partners to agree to some of these conditions of better access for US companies and US products, etc. So markets seen this in the past, and which is why they're very calm about it. I think there may be a correction or a significant pullback in markets if actually such high levels, 30-35% of tariffs get implemented and US starts collecting it. Why I say that is, look, in China's case also tariffs are implemented but never really collected for a while, and then we saw eventually a trade framework pulled out. So our base case view remains that similar to what US has done with TikTok, it kept on getting 3 months extension rather than a ban. Same thing is going to happen with the trade deals. I think the most difficult ones with China, Vietnam, US has broadly agreed to a framework. Same thing plays out with Europe, Japan, and Korea.
So Rahul, morning. You don't sound too concerned about these numbers, 30%, 25%, 50% in the case of Brazil. So, I mean, you're saying we don't need to keep any sort of tariff risk on the horizon?
Again, there's a lot of noise which is going to hit you. I think our view has been always to look at the intent rather than the noise. Look, what matters also for US is that inflation comes down, and so that you can have lower rates. And inflation comes down only when tariffs are reasonable. So which is why one would not go by these headline noises, these tweets which come almost every other day, and look at the whole thing from a holistic perspective. And that's where the sense is that, look, what US wants is to encourage domestic manufacturing. What they want is the goods which are sold in the market, at least 25-30% of them are kind of produced locally. US builds control of some of these strategic materials, etc. So I think that's the intent. And look, it's not going to be a straight path. It's going to be a bumpy road. After what we've seen from early April, markets are up nearly 25-30%. Some pullback is but natural. So you'll see 5 to 7% correction here. But what is happening is most central banks are cutting rate. Come September, Fed is going to cut rates. Growth should improve from here on. So which is why overall we would buy the dips here basically.
All right. Hi, Rahul. Good morning. Good to see you, Ben. From the Indian market perspective, you have mentioned that large cap is what you prefer, and banks and financials is something that you like. So run us through the thesis out there. You would stick to the larger banking names because there are deals happening on the smaller banks. So I wanted to review out there. And all of a sudden, suddenly we're seeing that the street is becoming a little bit more optimistic on consumption. And maybe some part of the street wants to look at staples. But you believe discretionary is the way? Run us through both those two, banks and consumer discretionary stocks.
Absolutely. So again, as the economy kind of bottoms and grows from here, banks are the best proxies. We've played it through the large cap banks, which are steady compounding machines. At the same time, we'd like something like a AU Bank, etc., which has done well over last 6 months. So select mid cap banks. So we're not against cap banks, so it's select mid cap banks, which are good franchises, good risk management, etc. Something one has liked. This quarter may be a bit soft for banks as some of these rate cuts impact the NIMs on the, more importantly, impacting the asset yields, etc. But from a medium-term perspective, look, banks are the best way to play the economic recovery. Outside that, consumer discretionary is something one would like to buy at pullbacks, and you're going to see pullbacks. We've seen from some of the results which came through. Basically, it's guidance of soft numbers this quarter. The recovery will take 1 or 2 quarters to play out, but look, the medium-term story is very strong for some of these travel and consumer discretionary names. Why discretionary over staples? I think staples are fairly valued. You may get a bit of a recovery here, but the competitive intensity is much higher in that space because of these new brands which have come in. And you will get a bigger kind of a bang for your buck in terms of growth recovery from a 3-year perspective in the consumer discretionary in select categories. Hotels are something we've liked for a while. We mentioned about travel. Outside that, some of these quick commerce name would be also interesting from a medium term perspective.
Got that. But just one, just going back to the global bit, Rahul, sort of US yields were up sharply on Friday. I mean, 6-7% long end, etc. as well. Do you think, personally, do you think that we will see, some change in the Fed or a shadow Fed? I mean, how will markets take it? It's never happened. That's why I'm asking.
Okay, so I think that is the risk, if you ask me, that the yields kind of go out of control and touch 5%. If you ask me the risk for the markets, that's the risk of the market. See, right now, what we've had is we've had the Treasury Secretary Scott Bessent, who's played the role of a mature adult here and calmed the markets on that. But look, if the government or the administration here takes a whimsical way to change the guard or the chairman at Fed, I think that would be taken negatively by the bond markets, and obviously equity markets would also react to that.
Okay. All right, Rahul, we'll leave it there. Thank you very much for joining us. Appreciate you coming on with that quick perspective on a bunch of issues. That is the risk. So, as Rahul points out, otherwise he's pretty sanguine that eventually things will work out with regards to tariffs. But 15 to 20% end state tariffs is what Rahul is kind of working with. We'll take a